Well, I think in terms of fiscal impact, first, the result of the election, the European elections, are not totally a surprise. Some part of it was expected. Now, in terms of fiscal impact, we've seen, this pressure on bond market and also on the fiscal stance in these countries before the election. And we've also seen a lot of pressure, for example, France losing its being downgraded by S&P only like a week ago, especially on this outlook for fiscal spending and the question marks that we see in Europe regarding fiscal sustainability. So in that sense, the European elections are just going to add a bit more uncertainty on the fixed income market. But this, I would say, was, well priced into the bond market already before the election, so before the weekend.
Are there long-term implications for things like immigration and how that impacts ultimately inflation? Is this a labour market story? Are there other ways of examining this? As Europe maybe shifts to the right, are there impacts, do you think, in terms of the long-term economic data we should expect to see in Europe? And therefore, again, by extension, how bond markets should think about pricing some of these moves?
Well, certainly, I think there will be implications for the entire agenda in Europe, whether it's immigration, the green transition, and also, of course, the fiscal stance. I would say for bond markets at the moment, we are more impacted by monetary policy in terms of direction. We've seen since the beginning of the year that the expectations for rate cuts and the easing cycle is probably way more important for bond market at the moment, at least the outlook for this year, rather than only the fiscal sense that always have an impact on spreads, on the level of yields. But in terms of outlook, the market is focusing at the moment on the outlook for monetary policy and also expectations that the rate cuts that started last week, with the ECB delivering the first rate cut in about since the COVID crisis, is having more an impact on the bond market at the moment.